Good evening, everyone. Welcome to Offices Adda 24/7. My name is Niharika Valia Bhatnagar, and I am with you with the area of accounting and financial management for bankers. And I'm here with you for JIB October 2023. So, today I'm going to talk about something that we started in the previous class. In the previous class, we started with the concepts of accounting, and today I'm going to lead you in terms of the detailed area of this particular concept of accounting. The last bit was left, that was conventions of accounting, and along with that, today we'll be dealing with case study based questions as well, single case study questions. So I think slowly and steadily I'll move on to the higher level as well. From this topic, normally they give one or the other question, so this topic is unskippable. You will have to do this topic because from this topic you'll always get at least one or two questions depending upon the examiner. Okay, so in that case, so let's talk about, first of all, let's finish off the topic that we started. Okay, we were done with assumptions, we were done with principles. So now the next point that comes is called conventions. What do you mean by the term conventions? Conventions is something which is going on in the market. So you can say that convention refers to something which is the basic working of the business. If I said that every morning we start the business from 9 to 7, who decided it? They said this is something that is a rule of the market, that everybody is opening the business at 9 a.m. and ending at 7 p.m. So that means this particular thing that they have said, this is one of the things that is going on in the market. Such things are called conventions, everyone. So the point that we are discussing is conventions. In accounting, even there are certain things which are considered that they are already going on in the market and are to be considered accordingly. So when we talk about the main conventions of accounting, what are those? Number one, convention of full disclosure. What do you mean by full disclosure? See, whatever happens in the business, a good thing or a bad thing, whatever the business is facing, that particular thing has to be recorded in the books of accounts accordingly. And that particular method is called convention of full disclosure. Okay? That is what we can define as full disclosure. So the convention of full disclosure says whatever we are dealing with, whatever accounting policies are being done, whatever things are we looking forward to, everything has to be recorded accordingly and has to be recorded properly. That is the main convention of full disclosure. Right? It says that entries are to be made in certain way that every single information is provided in a proper manner, and you do not conceal any information. You do not deceive the other person by keeping a little information with you. So that is what we call it, and there are nothing that is secret in this. Okay, so there is no secret that is allowed to be kept. Now, the next point is basically convention of materiality. Acha, what do you mean by materiality, everyone? Full disclosure said whatever is happening, specify everything, है ना? Okay. So now, when we talk about the convention of materiality, materiality means everything that is very, very important to the business. That is what we define as materiality. All the important information has to be noted down in the books of accounts. So what is material, what is immaterial, everything has to be taken. Material means important here. Okay, it's not the raw material. So full disclosure says tell everything. But then material accounting or materiality said that please do not record everything there. The point is, sometimes I might be just asking you about one particular project. Don't give me the information of the entire business now. That is too wrong, isn't it? So they are asking ki, what can we do in terms of understanding the books of accounts. So it is better that if we are asking a specific question, then we answer it to the specificity rather than giving the complete information. So all material information must be recorded. Everything has to be recorded properly. Okay, so this is about the conventions of accounting. Now the next point that comes is convention of conservatism. So full disclosure said, disclose everything. Materiality said, please just give the important information to the other person. And then the next point that comes is conservatism. So conservatism is talking about prudence. Prudence or conservatism. What is these 2 points? Principle of prudence. Prudence or conservatism talks about the basics of accounting. It says that if something good is happening, then wait till that thing happens. Now, do not have a party already. But if there is a loss that is coming up, please make sure you are preparing for it. You should prepare for loss. You should not be preparing for a profit there, but you should prepare for loss. So convention of conservatism says while recording the transactions, you should record everything that is anticipated to happen in future, every single loss. But if there's a profit coming up, then please make sure that you realize it first and then we will talk about it. So while recording the transactions, all possible losses must be taken into consideration, while all anticipated profits should be ignored. Just ignore every profit. Now, it's fine. So this is what they call it as the principle of prudence. Acha, next point. Convention of consistency. See, the point is consistency says that whatever you are following, keep on following it. But the point is, does it mean that we should not accept any kind of changes? Isn't it weird if I say no, the method that we are using is primitive, we had been using it for years and this has been done by our ancestors as well, so we will not change it. How will we survive in the market? How will we? Think about it. I don't think I can survive in the market without changing, isn't it? Now everybody has to go through major changes so that they can survive. So in this case, when we talk about the conventions of accounting, the convention of consistency talks about what? Consistency says that whatever we are following, whatever it is, we follow it judiciously. We follow it properly. But then if there is a requirement of change, there is no restriction. But if I go through the change from A to B, so then for that B, become consistent. You have to become totally consistent about it. That means if you have changed to B, then continue with B. Don't stop there. If you're doing A, then continue with A. Don't stop there. So basically, the change is accepted. But after change, consistently go through it. If the method is selected for recording and reporting purposes, it might be regularly followed in the future also. Whenever it is necessary to change, the impact of change must be disclosed separately. Again, if there's a requirement of change, number one, you can go ahead and continuously go with the change. But the second point that still arises here is that if you're going through the change, one more thing becomes important, that is to disclose. Convention of full disclosure. You have to tell everything that is happening in the business to the owner so that they are not misguided. That is convention of consistency. Okay? So in this case, we are done with all the concepts of accounting, principles of accounting, and then with the conventions as well. So now let's do a few MCQs regarding the same so that you can actually find out how much you have gained knowledge in terms of these topics, and along with that, we can also learn more things, how the case studies comes and what kind of questions can be made out of this important topic. The first question says, determination of expenses for an accounting period is based upon consistency concept, periodicity concept, timeline concept, or industry practice. Now, the question says determination of the expenses for the accounting period. We are just noting down the expenses for this period. We are not looking at something which is going to happen in future, something that has happened in the past. I am just focusing on today, right? So, is it consistency, periodicity, timeliness, or industry practice? Now comes the next pointer. Next point says that consistency, periodicity, timeliness, and industry practice. In terms of this, I would go for periodicity, because periodicity says that if you're trying to understand something, don't go for the entire thing altogether. No? If my business started in 1980 and right now we are in what time? We are in 2023 right now. Can we study the entire business in this way? No. We have to divide it into different years to understand it properly. And in our country, it is from 1st of April to 31st of March. So everything has to be grouped in this area only. So the correct answer is periodicity concept. Okay? Next point. The decrease in the amount of creditor results in. How does a creditor respond there? Increase in assets, increase in cash, decrease in cash, or no change in assets. Also, there is a decrease in the amount of creditors. The point is, creditor is what? The person who is supposed to get money from us. We owe him money because I purchased something on credit. So since I've purchased something on credit from him, so I'll be crying in front of them and says that, sir, I'm making the payment to you now. We are done now. Okay? So in this case, my creditor who is my liability, is my liability, and my liability is gone. So how do people get rid of their liabilities? By paying in cash, na? So technically you are losing an asset and losing a liability together. So in this case, you are actually decreasing your cash balance. How can you give money to someone and then not lose a liability? If I give you the money back, if I taken money from you and now I give the money back, I am no more answerable to you. The particular contract is over. So the correct answer would be decrease in cash. Next point, which of the following is the accounting equation, which is also called the dual aspect. So we have done that part as well now. So it is capital is equal to assets plus liabilities. Capital is equal to assets minus liabilities. Assets is equal to liabilities minus capital. Liabilities is equal to assets plus capital. Done. In this case, if I talk about making something in business, whatever I make in business to help my business grow is called asset. How do we get these assets? I can make my asset grow by putting my own money. For example, I got this particular laptop. Okay? For that particular laptop, I have spent 1 lakh rupees. 80,000 was my own and the remaining 20,000 was something that I took from others. So it is the liability. So basically, whatever I build up in the business to earn more money, I have to put my own money, and at the same time I have to ask other people to provide me more money. So this particular money is my own funds, and liabilities are outsiders funds. Done. So in this case, which particular thing matches? If I take assets minus liabilities, so there what is happening is the liabilities is moving to the asset side and giving us capital there. So the formula says that assets minus liabilities is equal to capital. Simple disclosure. So in this case, is there any point that matches here? B matches completely. Right? Next point, provision for the bad debts is made as per what? Provision for bad debts is basically being scared about the future. So basically, debtor was basically saying, debtor said that, sir, I won't be able to pay you. And I said, you won't be able to pay me. He said, the chances are high that I won't be able to pay you. Then what I'll say, whatever money you have, give it to me. Then provision for bad debts is basically anticipating that there is a loss that is coming up. So provision for bad debts is made as per entity concept, conservatism concept, cost concept, or going concern concept. Provisions are made when we are scared about the future and we are keeping a little money aside. That particular thing is called provision for bad debts. So in this case, the correct answer would be conservatism. Anticipate the losses but not profits, being scared about the future. And then you keep a little money aside for losses. Anticipate the losses but not profits. So that's the rule. That is called conservatism. Acha, next question. The valuation procedure for stock is is cost or NRV, whichever is lower. The procedure follows as per historical cost concept, going concern, money measurement, or conservatism concept. Acha, now the point says that if I bought that particular stock for rupees 100 and right now if I go to the market today, the value of this stock has declined badly. It has reached to a point of rupees 70. This means whatever I'm trying to make is facing a hard hit. The demand for that thing would have declined. That is why the raw material value is declining. Is it correct to record the goods at 100 rupees while the value has declined significantly? Not, I would say this is not something that has happened just in terms of fraction now. It's not a very little thing. It's a big amount that has happened. Hai na? So when you have such things happening, so what do you do? So in this case, what would be the correct answer? If you have 100 or 70, you note it at 70, which is called whichever is lower. So in this case, it is going to be historical cost concept. Is it related to history? No. Going concern, is the existence of the organization under threat? No. Money measurement, obviously this is in terms of money only, so there is no violation or related to this as well because they are not blindly talking about money. But yes, they are talking about conservation. That means prudence. Whenever you see a particular profit coming up, wait. But if you have a loss coming up, record. Done? Okay, now let's move on. Oh, no, this is as per cost or realizable value, whichever is less, is based upon conservatism concept, not on the basis of money measurement. It's conservatism. Just a mistake there. Next pointer. When income recognizes on cash basis and expenditure is on accrual basis. So there are different methods of accounting. First is when we record purely in terms of cash. I would say that everything that relates to cash, just note it down. And then the next point is accrual basis, which records things as and when they are on due basis. Okay? So when it is on due basis, how will we record it? The point is, when we say the usage of accounting system, which is a mix, it's a mix right now, na? There is a part of it is using cash. That means whenever we receive cash, we'll record it. And then we are also using due basis. Expenditure is recorded in accrual. That means as soon as the amount becomes due, we will record accordingly. So first is accrual basis of accounting. Second is cash basis of accounting, or mercantile basis of accounting, or hybrid. There is one simple rule, everyone. Whenever you see mix of two methods, one is cash and second is accrual, then such method is called hybrid. Ticket is called hybrid. Next point, accounting. Hybrid is basically the mixture of both. Cash basis, recording everything on cash and everything on due. It's a mix. There are certain elements which would be recorded on the cash basis and certain on the other basis. Accounting does not record non-financial transactions because of entity concept, accrual concept, cost concept, or money measurement. When we talk about accounting does not record, yes, it's true, there are certain things which accounting does not record, the non-financial transactions. Non-financials are the one which are related to the area of nature of a particular person, their loyalty, their dedication towards the organization. Those things are very strong. When people are working for the business, it's obvious there are certain things which they go, their dedication towards the job, the professionalism that they are showing, all those things. But the point is that there is one hardcore reality even now, and the reality is that can you record all these things in the books of accounts in terms of rupees, right? So more or less it is something which is based upon the area of the non-financial things has to be just ignored, because if we'll record it, then everything will go wrong. I can denote that I gave 100 rupees to someone, but I cannot denote the time that particular person would have spent while working with me. While both of us are working in terms of the business only, until or unless we are in the labor basis, na. But in terms of the regular employees, it's not about the hours that they are giving. It's about the dedication that they're showing to the organization, and that dedication can also be not shown in the books of accounts in terms of the quantitative area, right? So in this case, the correct answer would be money measurement concept. Due to money measurement concept, which says apna sapna money money. That means everything has to be recorded only when it relates to money. If it does not relate to money, then kindly do not note it down in the books of accounts. Next question. If an employee is of the business files a legal suit on the business, it is considered in the books of accounts as legal expense, liability, contingent asset, or contingent liability. For example, there's a particular person, Mr. R, who left the business. He decided that he doesn't want to continue with that person as an employee. So what will happen if there's one particular employee who has sued a big company? What will that company do? Is it a legal expense? But the point is they haven't lost the case yet. Is it related to that area? It's not even a liability because the case is not declared yet. Is it a contingent asset? Definitely not. It just doesn't look like an asset. The correct answer is contingent liability. Contingent itself says that is uncertain in the upcoming future. So consistency and certainty are both the essentials. But then when we talk about, we are not looking forward towards the future right now, because we can see there's a legal suit going on, and for that legal suit we are giving our full-time employees on this particular work. This is an alarming thing. So this is basically affecting our going concern to an extent. But the point is, in this case, it is contingent liability. Maybe in the future we might have to pay because the particular internal person would have got the documents or something na, to prove it that way. So in this case, it is called a contingent liability. A liability which is not something that is very big and which has to be taken into balance sheet, but it is not very small that if we do not record it, it would be fine. So it's basically a midway. Contingent liabilities are those liabilities where the things can become a liability in future. Right now they aren't. Done? So then, next point, everyone. What do you mean by this particular question? This is a case study, everyone. RPC Limited follows a written down value method. They are following a method in terms of depreciation, and year after year that particular same method is being used. Is it comparability? Because yes, it makes the entire thing comparable. Is it talking about convenience, or the consistency, or we can say all of the above? In this case, when we are looking forward towards depreciation, depreciation is the value reduction in the asset because we are constantly using it. Okay? So when we talk about using something constantly, then probably in that particular area, the business, for the business, it is better that if you're charging depreciation and everything is allowed, so you better take that particular area in such a way that the depreciation can be recorded in a suitable manner. So in this case, the correct answer is what? The correct answer is consistency. You have to follow one particular method. Now, why do you keep on changing the methods every now and then? This makes the entire working disrupted, because whenever you change the particular method, now then the new method is something which might be little different from the previous methods. That is why the business can be misled. Done, everyone? So now let's move on. Here comes a long question. This is a kind of case study. Look at it. Mr. A purchased a machinery for 1 lakh on October 2009. Transportation charges were paid for 10,000 and 4,000 respectively. The point is that if I have got a particular machinery at my place, and I have got it because I spent on its transportation as well. So technically, the value of that particular machinery is now increasing manyfold, isn't it? So in this case, what are they asking? They are saying that dismantling the old machine. We are dismantling the old machine, and in place of the new machine is a purchase for 10,000. Now the market value of that machine was estimated at 1,20,000, while the finalization of the goods of accounts, the value of machinery at 1,20,000 on his books. What would be the answer, everyone? Okay. Now in this case, can you see the particular person was first of all working at a particular cost. The machinery that they got is basically costing rupees 1 lakh, and then after that you have to pay the installation and other charges as well, but these are one time. So technically here 114,000 is basically their one time payment that would go, and then it can be divided into different years, every single month or quarterly or annually. All those things are there. Done, everyone? So in this case, what would be the answer? In this case, since we are looking forward towards something at rupees, machinery costing rupees 1 lakh, then I have spent this turns out to be 1,14,000, and then the old machinery was replaced with new machine for rupees 10,000. Market value of the machine is 1,20,000. So in this case, can you see the entire portion is related to the long term assets only, nothing else? Done? Chaliye. Now let's look at the answer in this case. The answer in this case would be what? Okay. So in this case, the correct answer would be A, values the machinery at 1,20,000 in his books. Why are we recording it at 1,20,000 when the value was 1 lakh? It is not allowed to do this. The point is that we should not do this as per the cost concept. If we bought it for 1 lakh, then kindly record it at 1 lakh only. If I've got my phone, then I will not change its value till the time I'm actually going to sell it. Till that time, everything will be recorded as their true value right now. So in this case, the correct answer is A, the cost concept. Apologies, and now comes the next question, everyone. Change in the accounting estimates means. What do you mean by changes in accounting estimates? The accounting changes, the changes that we're making in terms of estimations, is related to difference arising between different parameters estimated earlier and re-estimated, and is it difference arising between the parameters and the actual results, or is it related to the area of difference arising between certain parameters re-estimated during the current period and the actual results achieved in the current period? So in this case, the correct answer is actually B. Difference arising between the different parameters estimated earlier and the actual results achieved during the period. So we're actually looking forward towards actual and the standard, and then we'll find the deviations. How much we have moved away from our goal. Right? So here comes the next question, everyone. If a concern proposes a discontinue or its business on March 2010, so basically the organization is ending its work and deciding to dispose of all the assets within 4 months. So it's like we on 2010 31st March we said that the organization is ending within the next 4 months. The balance sheet should indicate that their historical cost, net realizable value, cost less depreciation, or the cost or market price, whichever is lower. See, the point is, if I've got this particular digital pen, I do not value it every single day. I might be having different classes every day, but I do not tell everybody in my class that array now its valued is this much, now this much. The day I'll be selling it away now, then I'll ask, Yacha, this is the particular thing I'd been using for this much amount of years. What would be the value? That means when you are disposing of the organization, you cannot record things as per what is written in the books. You will have to go at the market value today, and then you will have to sell it accordingly, so that you gain money and you can pay your shareholders and your you can say the shareholders, the venture holder, whatever the particular person to whom we are supposed to pay. All that can be taken in terms of this area, right? So in this case, we are actually talking about the assets that we are looking forward towards. That means in terms of assets, we do not record the assets on the cost value until or on the net realizable value. That means whatever we would fetch in the business, that thing will not be done until or unless the organization is dying. So valuation, revaluation is done at the end of the life of the organization. So in this case, the correct answer is net realizable value. If I sell it today, then what is the value of that particular thing? Is called net realizable value. Next question. It says that Mohan purchased goods worth rupees 15 lakh and sold 4/5 of the goods amounting to 18 lakh and paid the expenses of 2 lakh 70. He paid 5,000 for electricity bills and as well as advance salary accounting to rupees 15,000 was paid for the month of January. He counted the net profit at the end. What would be the correct answer, everyone? Mohan has purchased 15 lakh. Now, when we talk about this 15 lakh, what would happen? This is basically 15 lakh and 4/5 of the goods amounting to 18 lakh paid expenses. So just look at it now. So I had got 15 lakh rupees. Then the goods amounting to 18 lakh were expenses. 2 lakh 70 was also an expense, and I made a profit of 3 lakh 50. Point is the matching concept. Matching concept says whatever expenses that relate to this business, whatever income that is relating to this business, they then those expenses and those incomes should relate to the current year itself. because we want to find the current year profit or current year loss. So in this case, the correct answer will come out to be the matching concept. The matching concept says that record the expenses and incomes only for the current year to find out the revenue or the loss or profit only for the current year. No previous year and the future year should be noted in this case. Okay, so this is where I end my session. But before I end my session, I hope you have checked out our courses. And do you know, on Sunday I conducted a specific class for this particular session of AFM. So if you haven't reviewed the class yet, then kindly go ahead and check it out on our website or in our app for further details. So in this case, I think the YouTube session is still available on our YT channel, so then you can check it there. I think I covered the different topics of the MCQs of module A are covered there, so you can check it out. Along with that, if you're looking forward towards any of the courses, then this is the perfect time. Our new batches are just about to start. I think today only one particular session is starting. So what you can do is open up Adda 24/7, www.adda247.com. Just open that particular area up and then click on JAIIB and CIB. Right? So in this case, what are we dealing with? So these are the different plans that we are providing. The different Maha packs. Okay, now look at this. If I go on to the area of JAIIB and CIB, then I can click on the area of JAIIB October 2023. In this case, you will find all the individual cases as well. So that is in terms of PPB, IE and FS, AFM as well as RBWM. The bilingual batch is starting from 24th of July. So I think you have time. You can look forward to this particular batch, either English medium or bilingual. And you can use the code PREP80. The sale is about to end as well. So I think it's high time that if you're looking forward to purchase it, then you should do it as early as possible. So this is about the topic of the JAIIB as well as CIB. So the point is, this was only related to JAIIB. But if you think that you would like to do and you can do the working of the JAIIB and CIB together, then why not take the CIB JAIIB Mahapack 2.0? Under Mahapack 2.0, you will get both the English medium as well as bilingual. Then secondly, you will get all the test series, you will get the ebooks, and then if we talk about the entire business working, in this case what will happen is that JAIIB and CIB batches will help you to understand the banking process properly. And at the same time, if you're taking it up at this point of time, think about it, double validity is going on. So double validity means you just have to pay 11,577 for both the things, JAIIB and CIB, where we are covering mini marathons, mega marathons, practice paper, e-books, regular classes, test series, everything is available. So if you're looking forward to it, then for 2 years you have to pay 11,577, near about 500 something rupees. So then per month. So if you're looking forward to it, then kindly join the courses as early as possible. So this is the timetable only and only for accounting, right? So this is Mahapack 2.0. So you can look forward to this Mahapack even. So this is about the JAIIB and CIB. And if you're looking forward towards a specific packs now, then that is also available. Now the next point that comes is under JAIIB. We have also JAIIB October batches. Those are done. Then we have also got one more thing if you're looking forward to in the JAIIB and CIB Mahapack. This is the area. You have to go on to the area of offices at the Mahapack, which is available in terms of JAIIB, CIB, back promotion, as well as even the certified courses. So this is one of the win-win situations to look forward to. The cost of it is basically almost, you can say it is almost negligible. So in this case, why? Because it is 14,399.80. But the point is, in this you will get at least 4 courses. No? One is JIB, one is CIB, then at the same time the area of bank promotion, as well as the area of the um, the last is regarding the certification courses as well. So then if you're looking forward to it, then kindly go ahead and join it as early as possible, because again the number of the days are getting less and less, so it's way better than when you're preparing for this examination, then you are giving your best shot. So kindly go ahead and check it out on our website or on our app for further details, everyone. So I'll be meeting you on the next Monday.